Hi, this is Jordan Bradford with the Tranel Financial Group, and I'm here to talk to you today about what to look for in a growth portfolio. So most people are looking for one of two objectives as a global objective for their portfolios. Either income, could be now, could be later, or they're looking for growth. And growth could be something that you're looking for over the next 10, 20, 30, 40 years. You could be looking to grow your portfolio in a shorter time frame for a specific objective as well. But what I really want to talk today is not about the income side, but about the growth side and what to look for, how to build a growth portfolio to achieve your goals. And the first step is obviously discovering what is my time horizon. If I'm a 25-year-old who has a growth objective of having money for retirement when I turn 65, I've got a really long time. 40 years of market performance, growth, volatility. I can take advantage of all of that. If my goal is to grow in the next 10 years, I might have some changes that I need to put in the portfolio to be a bit more conservative while still taking advantage of that growth. But a common misconception that I find when it relates to growth is a lot of folks think a growth portfolio should just be growth stocks. And that's really something that I think gets maybe misrepresented in the market. Because people see value stocks, they see growth stocks, and they think, I want to grow my account, I should just own a bunch of growth stocks. The reality is actually that over the course of a long period of time, you look back over the last 90 years in the market, value stocks actually outperform growth stocks over long periods of time. So that doesn't mean that a growth stock or growth stocks in a portfolio are bad. What it does mean is that that's not the only thing that should be in a growth portfolio. In fact, there's a really strong argument to be made that a growth portfolio should have a lot of investments within it, a lot of different investments, things that do and serve a different purpose than other investments in the portfolio. You should have some international exposure. This can help offset times where maybe the United States economy is sluggish and international economy is performing at a higher rate. You also want to own some small companies. You want to own mid-sized companies. You may even want to own asset classes like real estate or some alternative asset classes within your portfolio. But a growth portfolio's real purpose is to allow you to be diversified in the market, capture the highest rate of return that you're comfortable with, and get you to your end goal. And so it's really important to align what is my end goal and when is that with what am I going to put into this portfolio. And the big thing with growth portfolios that I think makes a big difference or makes it somewhat unique as it relates to an income portfolio is that the biggest fee that you pay in a growth portfolio is volatility. And that is the fee that you're paying to get that long-term growth. So we're filming this in early 2025, and at this time, the market's been a little up and down. There's been news of tariffs, and of course, that's caused some market volatility. And if you're a long-term investor and growth is your objective, this is just part of the process that you want to be in. These are what we call buying opportunities. When the market is down, you have the opportunity to put some more money in, buying those asset classes at a discount. Conversely, if you were in an income portfolio, you don't want to take on as much downside right now because you're not adding to the portfolio, you're withdrawing from the portfolio or taking distributions. So growth portfolios are really designed and should be positioned in a way to perform even in volatile markets. But that performance should be looked through a lens of, I want some volatility. I want to see the accounts going up and down. If your account's only ever going up in small increments and there's no volatility, there's a high likelihood that you're probably not in a growth portfolio. You should see some bigger swings because that's where performance comes as it relates to a growth portfolio. Taking advantage of the ups and downs in the market is the biggest way to have a growth portfolio really achieve the goals that you're looking for.